Hi everyone. In this video, we'll see one of the major important news related to economics. That is when the RBI announced its bi-monthly monetary policy on August 6, 2021. We'll see the major highlights of the policy. Firstly, the RBI kept its key policy rate, that is repo rate, the rate at which it lends to commercial banks against securities. It kept the rate at 4%. This rate is unchanged for the past 7 times it has met. That is, it's unchanged since May 2020. The RBI says that it is so that it wants to revive and sustain growth so as to mitigate the impact of COVID-19 on economy. That is, it has so far maintained an accommodative stance related to its key policy rate. Then the reverse repo rate, that is the rate at which commercial banks park their excess reserves at RBI, is at 3.35%. Bank rate is at 4.25% and cash reserve ratio is at 4%. Now to keep the policy rate at 4%, there are 6 members in the Monetary Policy Committee. So 5 members uh, decided or voted to keep the repo rate at 4%. But one member of the MPC, who was Jayant Verma, he was a bit uncomfortable with the keeping the policy rate accommodative. So we'll get to know more about that why was it so when we get the minutes of the meeting on August 20. But till now we have this information. Uh, Jayant Verma's uneasiness with keeping the accommodative stance would be due to the inflation that the economy is facing. We know that the RBI has raised the inflation forecast for this year, 2021-22, to 5.7%. Earlier it was 5.1%, and now it has raised by 60 basis point. That is by 0.06%. 100 basis point is 1 percentage point. So it has raised the inflation forecast, and subsequently for the coming quarters of this year, quarter 2, it is projected that 5.9%, quarter 3, 5.3%, quarter 4, 5.8%, and for 2022-23, it is projected at 5.1%. However, the real GDP forecasts growth projections for this year are 9.5%, and for the various quarters as mentioned. We can see that there's a declining trend for the real GDP in the coming quarters. Obviously, the high in the quarter 1 is due to the base effect of the previous year. And for 2022 next year, for quarter 1 projections are 17.2% of real GDP. Now, I would like to ask you a question, or you can reply in the comments. What do you think that since firstly I'll tell you something. Firstly, we know that in 2016, RBI adopted the inflation targeting framework. That it was as its primary objective to control inflation. So it decided to keep the inflation at 4% with 2% deviation from either side. That is 2% to 6% it can deviate. And now, at the present moment, we are very close to 6%. Only 30 basis point difference is there when we may reach 6%. That is the upper limit for the inflation to rise. And since RBI has decided its primary objective to control inflation, shouldn't have been the repo rate increased so as to control the inflation? Or should it have been, as RBI has done, to keep the stance accommodative, keeping in mind the growth objective as well? What do you have to say on this trade-off between growth and inflation objective? And do you support the RBI's policy, or should have been the repo rate increased? So I leave you with this thought. If you want more information on news on major headlines and keep you updated, you may subscribe to my channel. Thank you so much.